I just had that. So I had a couple conversations this week about real estate, and I didn't. And like I don't know that like real estate is one of the areas where I know like very little about. So I don't flip houses. I don't. The reason I pay attention is because I kind of want to buy a house at some point.
Yeah.
But the conversation was that houses are unaffordable and people are thinking like, well, when can we ever kind of become an owner and whatnot? And like a few episodes, a few months ago, I think on an episode I kind of touched on it, and it reminded me of the data that I found, and I just wanted to pull some stuff up, Sammy, if you could share my screen. But it was basically I have a theory that within 3 to 5 years, home prices will see a significant drop. And I remember you mentioned like your dad's fund manager, was it? He was saying something that was more like a little bit sooner, like 2 to 3, was it?
Yeah, so like the guys that I was talking to were saying that they're thinking probably 2023. And for anybody listening, that like David and I, we're in Ontario, Canada. So the housing market here, I think I'm pretty sure it's like considered one of the most expensive in like the world, like in Toronto, like GTA area. So it's like the housing market's basically just been nuts here for the longest time. But yeah, like the guys that I was talking to were thinking like probably 2023, there's going to be, if not a decent like pullback in housing prices, then there's going to be a serious like flattening out of the curve kind of thing. And like I have some of my own kind of thoughts on that from both sides. So I want to hear what you have to say first based on what you were looking at.
Yeah, the reason, like, it's tempting to say it's going to happen soon because I think it's based on the speed that the home prices have gone up. People expect if it goes up fast, it'll come down fast. What I've learned from the last year is that markets are pretty resilient. Like bubbles can last quite a while and just be surprising, right? And the reason I say it's 3 to 5 is because it kind of coincides with where did I pull this up? So it kind of coincides with a demographic issue. So here's home ownership rates, right? Divided by age group. So you can see like people 35 and younger just not owning homes.
Yeah.
35, 44, like it's on a steady decline of ownership, right? But what's interesting is like the boomer generations, which is at 65 and over now, they're not only the wealthiest, but they're probably the largest demographic that's homeowners. And so I don't want to be morbid, but they're all going to start dying in the next 5 to 10 years, right? Or even if they're alive, they're probably going to start going into retirement homes, or maybe having the kids move back in homes. Either way, what I'm saying is there's going to be an abundance of supply in the market, right? So supply and demand still dictates price, and so I think there's going to be a large amount of supply in the market, coinciding with a time that interest rates should be quite a bit higher. Like interest rate for a home goes up 1%. When you're talking about $1 million, $2 million home, that's a big deal.
Oh yeah.
Right. That really cuts people out of ownership. So if interest rate goes up to maybe even 2.5%, 3%, that puts a lot of people out of the market, right? So then you have a situation where it's harder to get a loan. There's an extra abundance of supply, and I have a feeling that a lot of millennials who could be saving up for homes right now, or millennials and younger could be saving up for homes right now, aren't, because it seems like it's such an indomitable task, and so they're just doing the YOLO lifestyle. I'm going to rent and go on vacation and then when the right opportunity comes, it's going to be like, shit, I didn't save when I could have. So, I mean, these are all like just speculation, but I think it does follow some logic. And I think because of those factors, home prices will decline in about 3 to 5.
Yeah. So I have a couple different thoughts on that. Like I kind of agree with both sides of the coin on that particular argument, because like the way I look at it, so first of all, I don't remember the exact number. I think it's 2%. So when you buy a home here in Ontario, they have a thing called the stress test, which basically is like if the current mortgage rates are 2%, the banks will qualify you for a mortgage that's 2% higher. So they'll qualify you for a 4% interest rate on your mortgage. So like let's say with like David, like let's say with your income, you can afford a $1 million home at the current rates, which are say 2%. The bank will only allow you to have a mortgage on like an $800,000 home because they're basing it on 4%. And the reason that they did that is so that when all these people because that was the biggest thing I was talking to my mortgage broker about when we bought our house was, like what's going to happen in a few years? Like, is everybody just going to like lose their house because they're like, they're stringing themselves out way past their budget? And that's what he explained to me. He says, well, no, because like for us, for example, like we can afford a home that's worth way more than the one we're in now, but that would be on the higher interest rates. So essentially, like what they're trying to do is like, when we got our house, like interest rates were really low. I think now they're around like, just over 2%. So if the interest rates go up to even 4%, which is really high, then all those people that bought homes, in the high 1% or 2%, they'll still be able to afford their homes on their current salary today. And
Right.
assuming, obviously, in a 3 to 5 year mortgage, they're not going to get a raise or make more money, which they most likely will anyways. So for that reason, I don't think that a lot of people are going to be like getting kicked out of their homes unless obviously interest rates go to like, 7, 8, 9% or something ridiculous. And the other thing is, because they're saying housing prices are going up so much, there's another big thing here in Ontario, anyways, is immigration, which has been shut down basically for COVID, right? So, like, we have lots of immigration here, lots of people coming in with money that are buying houses. So, currently, the market's been going pretty crazy because everybody's basically buying houses or trying to get out of the city and all that kind of stuff. Once COVID, whether it's a year from now or 2 years or whatever it's going to be, finally really kind of tapers off, and we can allow, assuming our government doesn't change its policies, immigration getting back up to the same kind of flow that it was before, you're going to have way more people coming in with money again. So even if there is potentially a bit of a surplus in housing from, say the baby boomers or people losing their homes because interest rates go up too much, that could easily get matched by the immigration coming in, which would cause the prices to not drop at all and potentially just keep rising, right? So that's kind of the devil's advocate side of that coin.
No, I agree. I saw two factors that could possibly keep the prices up or from not as dropping as low. One of them is the foreign investor immigration thing. Although at least from the Asian side, I think that side's going to start drying up from the Asia. I'm not sure about Europe. I don't know there, but like China's right now, they're cracking down very, very hard on capital outflows because of the way they print their money. They can't allow too much of it outside of their country. Otherwise, it kind of like starts to threaten their market, their economy. And so they're heavily restricting how much money can be moved out each year by citizens. And on top of that, they're really clamping down on Hong Kong right now. And a lot of buyers are from Hong Kong. Because the thing about Hong Kong is it's so expensive that if you sold like a shack there, you could buy a pretty decent house here. It's just ridiculous.
Yeah.
Right. And so, but now that China's like really trying to exert their control over Hong Kong, I wonder how many of their people they're going to allow to come out to, buy a home here, or even become a citizen here. So that's like one. So I see that foreign thing as a factor, but that's the X spot that I don't quite know how it's going to play out. But the one thing I didn't anticipate that apparently is happening, Sam, if you could pull up my screen. This is Canada. Investors account for a fifth of home purchases in Canada. They're driving up home prices. So this is kind of like going to the rich get richer thing. Investors, a lot of the home prices are being kept up because investors are buying homes. And actually, BlackRock Blackstone made news the other day. They put $6 billion into buying and renting homes. And so what's happening recently is like hedge funds are starting to buy up properties.
Yeah, I was reading an article about that actually. They were buying like whole subdivisions, and I didn't really realize that. And I heard people like getting all upset about it because they're like a bunch of my friends still don't have houses or anything like that. They're all like almost in their 30s kind of thing, and it's like, well, how the hell are we supposed to afford a home if they're like just coming and buying it and listing it higher, trying to turn a profit or renting it? Right? It just makes it even harder. I'm not sure what the government stance is going to be on that.
This is the problem with lobbying. I feel like the government's going to their hands are going to be tied.
Mm-hmm.
But it creates a problem, right? If hedge funds who have the money to buy the homes now or up or down become landowners and they just perpetual income is rent, right?
Yeah.
What happens? It's so like I worry that without government intervention, house prices could stay up, and then it's because of these factors.
Yeah, that's kind of what I was thinking too. Like I don't see housing prices coming down. I can definitely see them slowing down and then tapering off and speeding back up as they do. But unless we have like a major economic shift, I just don't personally see them taking a dive anytime soon because I don't think the government can let it. Especially now, even more so now if you're getting investors and stuff buying this, like they're not going to be able to.
Yeah, it's multifaceted for sure.
Yeah.
I had one thought though that the extra supply in the market thing, right? So A couple of the people I was talking to, they made a good point. They're like, the children of those boomers are probably going to inherit the homes, right? So they're going to split it between the siblings and whatnot. And I thought, well, realistically, maybe you could tell me, but realistically, I think those homes are still going to end up being sold on the market. Because if you look at the current culture of just like not really saving, these people are probably going to be inheriting the homes at a time when they're heavily in debt. So then inheriting a home, like $1 million home, is like a jackpot. So
Yeah.
the thought process could be, hey, maybe we sell the house, downsize, and pay off our debt. So either way, I think those homes are going on the market.
Right. The other thing too that a lot of people don't realize is that you have to pay taxes on that, even if you do get a home, like in a will or whatever. Like if you have, my dad explained this to me because he's owned our cottage for like over 30 years. Me and my sister always joke like, oh yeah, when we better get the cottage in the will kind of thing. Then the one day he's like, oh yeah, he's like, oh, I gotta leave you like a few $100,000 with it too. I'm like, what are you talking about? And so I did some research. He explained it all to me. So like, basically he has to leave you enough money to pay the taxes, like essentially on the sale of that home. So like, if you're looking at something that's like, a $2 million property, if somebody passes away and gives you that property, you have to pay the government like something like $300,000 or $400,000 in taxes to accept it. So that's why you get so many, like when you see an estate sale, that's why it ends up being like such a good deal, is because a lot of the times, like, like God forbid, imagine someone in my family passed away right now and they left me their home, the government would be standing there like, okay, you have to pay us, $200,000, $300,000, $400,000 in the next couple months, or, we're taking a house. So that you have to basically rush to sell it. So that's why I think a lot of those things, that's why I kind of agree with you. I think a lot of that stuff is going to go on sale.
I'm just trying to look up real quick what the percentage is. But that makes sense. I forgot about that one factor.
I'm not sure what the percentage is, but I know it's a lot of money. Like it's enough that like you wouldn't be able to afford it.
On top of that, non-registered capital assets are considered to have been sold for fair market value immediately prior to death. Any resulting capital gains are 50% taxable. So you're just getting hosed.
There you go. So that's why. So if you look at my parents' cottage, they bought it for $30,000 in the 80s. Now it's worth a few million. So their capital gains on that is like, say $2.5 million. So I'd be paying tax on $2.5 million if they gave me that cottage. It's fucked, for lack of a better term. So that's the thing though, right? So if you get these estate sales, it's like, oh yeah, it's great. Mom and dad or grandma and grandpa left us the house, but you have to sell it. You have no choice, even if you want to keep it, unless you got a few $100,000 laying around that you can just afford to drop right then.
Wow, that's just ridiculous.
So that's
well. So I guess I think those are going to be the opposing factors to watch. Then, like, how many forces are continuing to buy, whether it's funds or foreigners, and then it's going to be versus supply. How much supply will be dumped onto the market?
Yeah, exactly. It's going to be really, like, it's really interesting. That's the funny thing. It's just another market, right? Real estate, it's just another market.